to be open for sure. But for viewers, why we're having this trading session, now it's a special trading session. The second time this year that the Indian exchanges have been conducting a special live trading session on a Saturday in order to switch over to the disaster recovery side. The first one was done on March 2nd, which was a Saturday as well, and we had 2 trading sessions on that day itself. Now, what the special session basically does, it tests the preparedness of the exchanges in case an unexpected event happens during normal trading sessions where the NSE or the BSE have to switch to their disaster recovery sites in case of an emergency. Now, this could be a security breach or market operations where they are temporarily reallocated to this recovery side. Key pointers for viewers to note for the special trading session today. For the equity segment, the normal market, we have it divided into 2 sessions. The first session starts from 9:15 to 10 a.m. with the pre-market from 9 to 9:15. And the second trading session, which will take place on the disaster recovery side, will be from 11:30 to 12:30 with market open before the 11:30 a.m. time for 15 minutes. Now, there are certain changes in terms of the price bands. Now, all securities will have a maximum price band of 5%, and securities which already have a price band below the 2% or lower price will remain and available at that respective price band. A price band of 5% will also be applicable to all the close-ended mutual funds, which going with their structure do trade similar to that of the stocks in the share markets. All future contracts will also have a daily operating range of 5%. The price band for equity segments and the futures contracts, which will be applicable at the start of the day, will also be applicable in the second section, which is on the disaster recovery side. And any changes in the price bands of contract options due to no market factors up to the closing time at the primary side would also be carried forward in the disaster recovery side. So any price bands in the option contracts in current session from 9:15 to 10 a.m. will also be carried forward in the second session, which starts at 11:30 a.m. Moving on, let's just talk. Let's just address the pre-open rate, which will be on your screens in the next 4 seconds itself. So we'll be looking. Key to note that the phase 5 elections in the MMR region start today, and markets have been volatile for the past week, and there you have it. The Nifty 50 fairly flat, a little bit of a positive bias, up 0.19%, and it's gaining. And the Sensex outperforming the Nifty 50 right now, up almost 1%. But key note to viewers, these are pre-market open trades. They might give you a certain kind of indication, but you can never be sure on how the markets, trade thereafter. If you could also have certain stocks and their pre-market open rates. Anushi, do you have any stocks in mind that, we should check out the pre-market rates?
Absolutely, Mihika. There's like a whole list of earnings which came out in trade yesterday. I'll start off with JSW Steel first. Now over here, if you have to look at JSW Steel, the revenue about 1.5% down, while the EBITDAs and margins also remained in pressure, about 22.9% down, and margins 13% compared to 16% that it had reported last year. But do note that this was on account of the lower steel prices, which has impacted the revenue, and also the margins were lower on the account of high coking coal prices. Again, there was a tax impact also, because of which we are seeing a 67% dip in the net profit. JSW Steel about 0.24% down in trade in the pre-open trade today. Moving on to Sobha, again, this was a Nifty Realty over here, 37% of a revenue down. But do note that for Nifty Realty stocks, the revenue is based on the percentage completion or project completion method. So it is on the lumpier side. So again, we should not place a lot of emphasis over here. Can we pull up Sobha over here in the pre-open? About 5% we are looking at. It's about 5% down. That's the band, that's the lowest price band that we should be looking. Again, if you have to look at the key highlights, the total sales value was up about 3% in the quarter, while the collections rose about 5%. Then on the list is Zydus Life Sciences, revenue up about 10%. Now, this was supported by all 3 of their business segments, formulation, consumer wellness, as well as API business. Margins, again, some healthy growth over here. About 29% of EBITDA margins compared to 26%. So healthy uptick in the margins we are looking at. And net profit about 299% jump. But do note that there was an exceptional loss of about 601 crore in the last year's quarter. So because of which we are seeing this jump. Again, 5% of in the upper circuit today. So can you talk about more stocks?
Yeah. Before I get into more stocks, let's just take into consideration certain of the global and domestic cues. Right. We do have stocks hitting the upper and lower circuit in today's session on the back of their earnings, and we'll address those later on. But in terms of global cues now, keynote for viewers that all the stock markets around the world will be shut today. It's only the Indian exchanges that will be trading due to the special live trading sessions. But when you talk about Friday, and US stocks did waver near the record highs, and there was a rally in the market which was leaning towards the longest streak of weekly gains for the US markets since February of this year. Now the S&P index closed 0.12% higher. The Nasdaq Composite fairly flat, but 0.07% lower in trade. And when you talk about the Dow Jones, it rose 0.34% higher, we're clearly outperforming the other benchmarks. There was certain geopolitical tensions that did take place. We had we know that there have been multiple Middle Eastern conflicts going on, but the ones that did take some steam on Friday was the Israel-Hamas conflict. Now, Israel forces did battle Hamas fighters in the Jabalia region, which is located in the northern part of Gaza, which happened yesterday on Friday. Now, reports are suggesting fierce engagements since Israeli forces returned to the area around a week ago, and South militants are attacking the tanks massing around Rafah, another region. And amid all of these fierce engagements, you do have the U.S. military that has said that trucks have started moving aid ashore for Gaza, and this aid is passed via a temporary pier, which is the first to reach this sea in weeks. When you talk about Middle Eastern conflicts, you also have to take into consideration Brent prices. They weren't very volatile in yesterday's trading session. They did close 0.7% higher and are trading around the $83 range, almost 84 if you go to see. They closed at $83.98 per barrel. They did reach an intraday high of 0.77% in trade yesterday. But however, it is key to note, in the past month, despite the geopolitical tensions that have taken place around the world, and despite a certain war premium, put into the Brent oil market, prices are down 4% in the past month, but they are up almost 11% year to date. In terms of the domestic cues, Anushi, what is something that we need to watch out for?
Well, the domestic picture also looks quite healthy, Mihika. Now, if you have to look at the last week, the benchmark equity indices, Nifty had gained about 1.86% in this week. The gains were mainly led by M&M, healthy earnings over here. Along with Adani Enterprises, Nifty Bank gained over 1.46% over the week. Now, this was led by Kotak Mahindra and Bank of Baroda. Now, even if you have to look at the weekly top sectoral gainers, we have Nifty Realty back in traction over here with Oberoi Realty, which came out with its results this week, along with Brigade Enterprises and Focus. That was pulling up the Nifty Realty Index. Again, on the loser side, we had Nifty FMCG. This was dragged by Dabur, along with Britannia indices over here. But now let's talk about what happened in the trade yesterday. So yesterday's gains were mainly led by Mahindra and Mahindra, Reliance and HDFC. So key heavyweights over here pulling the Nifty indices about 0.27% higher. It closed higher comparatively, and Sensex gained about 0.34%. Now, on to the sectoral gainer of yesterday, Nifty Auto was a clear standout with M&M, again, healthy earnings over here, and Balkrishna Industries pulling up the Nifty Auto Index. Also, we had Nifty IT, which was on the top sectoral loser side. This was dragged by Emphasis and TCS. But now, if you have to look at the DI and FII activity which took place, so overseas investors turned net buyers on Friday. This was after 11 days of consecutive selling we are looking at. Even if you pull up the calendar year 24 data up till now, the FIIs have remained on the selling side. So again, this was kind of relief. We just discussed yesterday about this ICICI report also, wherein FIIs, they have like select pockets in where we are seeing the domestic buying, which is in the capital intensive stocks. But on the other side, it's the private banks which is mainly leading to the drag that we are seeing for the foreign institutional selling that is taking place. On the other hand, domestic institutional investors remained buyers over here for the 19th day consecutive buying over here. So if you have to look at just yesterday's flows, FII is picking about 1,600 crore, while DI mopped up about equity shares of about 1,500 crore. So this is how the overall picture looks for the domestic cues as well.
Okay, and Now, speaking of domestic news, we're a few minutes away from the trading session going live, and let's welcome our guests for today. And we have Vijay Chopra, who's the MD and CEO of Enoch Ventures, as well as Aditya Arora, who's the founder at Adlitech. Good morning, Mr. Chopra and Mr. Arora. Yes.
Very good morning.
So first, I would like to ask each one of you on your thoughts on how today's sessions will go. Yes, there's a break in the middle. I'll start with you, Mr. Chopra. What do you feel? How will markets open today?
Well, I think that markets have been volatile, and this volatility is primarily due to the anxiety which the market is feeling regarding the elections and the election results. Even the voting turnout has been a spoiled sport. On certain days when the voting turnout was low, the markets literally came down. And when we saw 69% plus voting turnout, the markets gave a thumbs up. So this definitely happens around elections, and this is quite natural. But again, I think that there are pockets of excellence which can be looked into, and there are companies, there are stocks, there are sectors which are performing very well. So I think that even today it's going to be, although it's a very shortened time span, but we will see volatility for the next few days to come. And I would say that, be very cautious with your leveraged positions. Don't be leveraged, especially, what we saw lately, that option writers were taken literally for a ride, when the Nifty moved 300 points within 30 minutes. So I think that, don't take leverage positions. Stay away from options, especially retail investors. Even the finance minister is feeling so. So I think that, better not to be leveraged, being very good, fundamentally strong stories. There would be pockets of excellence. The companies which have positive cash flows, low debt or zero debt should do well. And I think that, railways is the sector for me today. Railways should do well.
Okay, that railways is the choice on behalf of Mr. Chopra. And Mr. Arora, what do you feel on how, in terms of levels, how will the markets be? Will it be as volatile as we've seen in the past few trading sessions, or could we get some relief in trade today?
Hi, first of all, good morning to you and to everyone. I think markets are going to be range bound today, and already we have taken some cues from the global market. Hence, we are opening gap up, but gap ups less likely sustain in Indian market. And given that we have aggressive short position in derivative space by FIs, so that will for sure create some volatility. Now, FIs are sitting with record high short positions, so any bounces are likely to be sold into in the short term. And as Mr. Chopra likely said, that there's going to be volatility. India VIX has jumped from almost 11 to 21, 20 kind of levels. So that indicates that market is going to be jittery, market is going to be nervous. So for sure, there's going to be volatility. But as we don't have any global markets open right now, so markets will tend to be little muted. But overall, I think nothing much to expect from the market on either bullish side or bearish side. The upper range for the market is 22,550, and on the lower hand, the range is 22,400. So that's how markets are going to be today. Stock specific action is important.
Right, Mr. Arora, you mentioned about the levels and the stock-specific action for today. But now, if I were to look at this week, Nifty Realty, top gainer over here, I want to understand over here how we are looking at the top sectoral gainers for this week, that is Oberoi and Brigade. And on the other side, we also have FMCG, which is not doing so well this week, especially like the likes of Dabur and Britannia. So if we can, what should we be watching out for them in trade today?
Sure. I think Nifty FMCG basket really stands out because the rally in the sector is emerging after a very long time, after a long period of consolidation, sluggishness. So now, there's a fresh life into the sector, and there are fresh leaders over here. So Dabur, one of the stocks which you mentioned, looks strong on the chart. Marico is another one which looks strong on the chart. And there could be a start of a fresh rally here. Not only intraday, even positionally, I think these are safe pockets to hide. And, when money is flowing from, risk on assets to risk off assets, or, more high beta counters to less high beta counters, then FMCG is the likely basket where the money flows in. So, I think this sector really looks good. for the short term and for the medium term. And I'm bullish on Dabur and I'm bullish on Marico.
Got it. A positive outlook on FMCG. Mr. Chopra, do you have the same views or do these views differ somehow?
Well, I think that, when people leave or shun the sector, that's the time when to latch on to it. I think that IT, FMCG are traditionally very conservative sectors. And I think that these are times when you should start nibbling into IT stocks. Why not a ITC or why not a Hindustan Lever at these levels? If in the results, Hindustan Lever gave a commentary that, we are seeing some green shoots in the rural demand. So this is really good. And, we have a very good impending monsoon, which is around the corner. And it is expected that it should be 106%. So I think that traditionally FMCG companies do very well around monsoon because, this actually propels the demand in the rural space. So I completely agree, FMCG, and I would like to add IT to it, buy a TCS, buy a Wipro, buy a Tech Mahindra, buy an HCL Tech. These have been laggards in this rally. So all these companies are top IT companies. And of course, this overhang of, AI would surely go over a period of time because, even to develop AI, you need people. So it's not like that, AI is eating away jobs. It's just a shift of technology. And it happens once in a while. So I would say, tech companies, if at all they are valued, they have actually laid off a lot of employees and their major cost is the employee cost. So post this, I think that the balance sheets would look good and they would develop their capabilities towards the newer technologies. And I'm sure that, Indian companies have that mettle and capability to take on the global majors, and they have operations across the world. So I'm fairly bullish on good top IT companies, number one, and definitely FMCG companies as well.
That's your view on IT and FMCG remains as the top picks. Now, I want to understand there's a lot of stock-specific action happening here based on the earnings. So, Mr. Chopra, I want to come to you. JSW Steels over here, the numbers majorly in line. It was expected that the revenues and the EBITDAs was expected to go down. So, how are we looking at that? It seemed to have...
Yes. I think we have some technical difficulties when it comes to Mr. Chopra, but we are 5 seconds from markets to open today, and up first we'll see how the benchmarks have reacted, and markets are live on today's special trading session. We have positive action on both marks, fairly flat, but in the green nonetheless. Nifty 50 as well as the Sensex up about 0.2%. When we look at, I want the heat map, if you could get the heat map over here of the Nifty 50 action. We did have a Nifty 50 company, fairly green heat map that we have over here. We have some energy picks. We have an ONGC who is due to post their earnings on May of 20th. Then we have a Power Grid as well as a Shriram Finance. Nestle, where shareholders unitedly disapproved to raise their royalty fees in the green. When we talk about a negative reaction, we have JSW Steel, who reported numbers fairly in line, but it is our top loser on the Nifty 50 today. Even when we look at fairly flat numbers, we have the TCS, we have our HCL Tech, we have a Infosys that are fairly flat but showing positive returns nonetheless. Not any significant action, but you do see ONGC that is gaining in trade today. When you talk about expectations that we have from the sector, we do the street does expect EBITDA to rise 14% according to consensus estimates. When we look at these sectors, if we could get the sectors that are gaining in today's day of trade, we have the Nifty Media, and this could be, we had certain earnings come through. We have the Nifty Media up about 0.15%, as well as the Realty, who is the top sectoral gainer in trade today, as well as the PSC, Nifty PSC, and the multinational companies, Pharma, as well as the PSU Bank showing some strength. But if we talk about the losers, if you could get the ones that are not doing so well in trade today. Okay, while we get that, let's just talk about Nifty Media. We did have Z Entertainment that did post its numbers this week. Revenue was up 6%, EBITDA fairly flat, up 0.5%. Margins did see a contraction, and it is up 4.5% in trade today, which is at the upper circuit of almost near the upper circuit. So we have a positive reaction. We do know the net profit was down 77% at 12 crores, but we do see some kind of strength in these stocks. Yep, and now we're going to Anushi. What are the other stock-specific action that we had highlighted, or we were keeping a watch on in back of earnings and other news flow?
Yeah, one standout stock that we should be looking out for is a JSW Steel over here. Now JSW Steel about 0.71% gains that we are looking at. Revenue about 1.5% down. 0.4% decline over here in JSW Steel. A tax impact of about 136 crore earlier, which why we are seeing it in the negative. Now moving on to a Sobha. Now the company's revenues were down about 37%. Even the EBITDA margins remained under pressure, while the total sales collection was healthier, about 2.8% growth over here. But the stock is facing some heat in the session, about 2.7% down in today's trading session. Again, we have to look out for how the company performs in the Q1 FY25 period. Next, moving on to Zydus Life Sciences over here. Strong numbers over here, revenue about 10% of a growth, but the EBITDA margins also moved in the range of 29%. Clearly in the upper circuit, about 5% locked over there, which is the price band set for today. This was supported by their formulation, consumer wellness business, all of them going up, and even there was an exceptional loss of about 601 crore, which has supported this growth that we are looking at in the net profit, about 299% of a growth in the net profit over here. Now moving on, we also have RVNL, which was in focus. Revenue about 17% up, EBITDA about 22% up. Again, strong gains, 4% up over here. Also, they had a management commentary going on yesterday. Now let's look at a Nestle over here, wherein the majority of shareholders, I think we've already discussed about this. The stock is about 0.8%. Can you pull up a Nestle, the chart? So that was because after the shareholders rejected the company's proposal to raise royalty fee over here, it is about 0.7% in the green in today's sessions. But Mihika, there are other stocks also that we should be looking out for trade if you want to take that up as well.
We have an NHPC, which is a Nifty 50 stocks. Now, revenues were down 7%, EBITDA was down, and you could see the negative reaction on the street as well, down 1.6%. Margins did see an expansion, however, but they did miss estimates. So margins were at 47% versus 44% a year ago, but the street estimated 50% of margins, and net profit, which was down 18% to 611 crores. We did see a dip in the net profit, and it also missed estimates. I also want to pull up a Delivery who had some news flow as well as its earnings come out. Fairly flat in terms of reactions. Now, when you talk about Delivery, revenue up 11%. We had EBITDA at 46 crores versus 13 crores a year ago. Did miss estimates on that front. Margins, we did see a significant gain. Like a year ago, we had 0.7% margins, which are clearly negative for the company, but we did see some amount of hope. Margins at 2.2% today. The board also approved the liquidation of their UK-based arm Delivery Corporation, and also approved the incorporation of wholly owned subsidiary Delivery Robotics. Up next, I want to talk about a Phoenix Mills with the Nifty royalty in focus in the past week. It's up 5.16%. It has hit its upper circuit. Now, revenue was up 79%. EBITDA was up 45.5%. We did see a margin contraction when you talk about the year ago, and that's why it did miss estimates. But net profit beat estimates by a large amount. It was up 34%, and the board also recommended a final dividend of ₹5 per share. And lastly, I want to pull up a BEML. Now, the company's gotten orders worth 250 crores from Northern Coalfields for a dump truck, and you can see some amount of positivity in the street. I'd like to bring our guests back and maybe ask them on how they feel about certain counters. Mr. Chopra, what are your thoughts on Phoenix Mills?
I think that this is stupendous, result the company has given. And I'm in the longer run fairly bullish on the real estate space. The reason is because most of the inventory they have actually sold. Number two, we are at the top of the interest rate cycle. So chances are that the interest rates would soften from here, and it would be very good for interest rate sensitive sectors like real estate. So the top rung companies, DLF, Phoenix Mills, Sobha, Brigade, these should do well. Even the mid caps, there are certain companies in the mid cap space as well in the real estate which would do well, and the companies which do not have an overhang of inventories and they have very reasonable debt on the books, only those would survive. So I think that in the longer run, real estate should do well with the next 2 to 3 years perspective. Yes, buy in a correction. These stocks have moved up quite a bit. I would not recommend that you just jump and buy into these stocks right now. Wait for a correction and buy the top run companies as I've mentioned some of them.
There has been a strong run up in any of the Nifty Realty stocks fairly. Mr. Arora, what about you? What levels is this a right time to buy, or do we expect to see some dip in the market? Where is this an attractive buy according to you? What are your thoughts on Phoenix Mills?
I think Phoenix Mill is a evergreen stock, and it has been the only stock which is rising consistently without major dips. Although we have seen other counters also rising quite a bit, but they come with a lot of drawdown and there are big dips. But Phoenix Mill has been a consistent compounder in last 2 to 3 years. So I think it's a top quality stock, and if one has a long term view, then every dip is a buying opportunity. But if we talk about short run, then I think 3250, 3300 are the levels where the resistance is placed. So that's the short term and long term.
Now, Mr. Chopra, I want to come back to you over here. So now, if you had to just look at today's clear standouts, Bharat, Dynamics, Mascow Dogs, the whole defense pack is up. I want to gather your views on how we are looking at the defense pack. The stocks like a Mascow Dog has had quite some run up, about 30% of gains in just these 5 days itself. What are your thoughts on Mascow Dog and the whole defense pack in general?
I have iterated time and again, and this is, I think, maybe the 100th time I'm saying I've practically said it on all the business channels. If India has to become a 5 trillion economy, it would be led by defense. And we are seeing now a huge shift in the defense outlook. Number one. Secondly, the way the world sees us, the way we see us, and the way the government sees. Actually, the government of India has put a huge focus on defense. And, we are seeing a lot of interest and a lot of orders flowing from smaller countries which cannot go to US or Europe or the bigger, defense players. And they come to India because it is cheaper. The likes of Mascow Dock, Cochin Shipyard, GRSC, they have done very, very, very well. Look at HAL. They've been doing light combat aircrafts and they've been getting orders from countries like Indonesia. So I think that it has been a fantastic run. But again, I would add a word of caution. These stocks have moved up quite a bit. They might correct. It's a great sector to be in, but not right now. So keep on booking profits if at all you are invested. If you're a long-term investor, if it doesn't matter, the stock, maybe corrects 5-10%, then it's perfectly okay. Stay invested. But traders and short to medium term investors, I think that they should book profits and wait for a correction to re-enter. So I would say that if you get an HAL anywhere between 38-3900 would be a great level to get into. A BDL around maybe 18-1900 would be a great level to get into. So all these companies, whether it's BDL, HAL, the shipping stocks we have mentioned. So BEML is one of the major players in the defense space. So all these companies have done well, but yes, wait for a correction to get into them. And I think that if you look at these companies with a 5-year perspective, these companies might double up as well. Look at Solar Industries. It is another defense play. So Solar Industries touched about 9,000. I've been tracking this stock when it was 600, 700. I have recommended it many, many times. So all these companies in the defense space would keep on getting good orders. Just one data. Look at GRSC. The order book is 4 times larger than the MCAP of the company. So these companies are flushed with orders, and these orders are definitely helping them to improve their balance sheets, and we are seeing a depiction in the stock prices as well. So, but yes, after a decent move, some kind of a correction would be healthy for any stock, any company. So I would wait for a correction to get re-entered into these stocks. We are recommending that keep on booking profits.
Yes, Mr. Chopra. People do get very, on the higher valuations of the defense companies, but at the end of the day, it all depends on their order inflows and how they execute these orders in a timely manner. Mr. Arora, I'd like to go to you. Significant round up. What would be the right levels to buy if someone wants to, get in the defense play?
I have little contrarian view on the defense space. I think the space is pretty overbought on the charts and overvalued. So I would say that overbought on the charts, and I think these are the levels to actually book profit. And we have seen significant run up from, if we talk about HAL, then we have seen significant run up from 1700 kind of levels to almost 4620. So 4620 to 4700 is the resistance zone, and extended Fibonacci zones. So over here, one could, look for opportunity to take chips off the table. And I have pretty neutral to bearish view on the defense space.
Now it's time to take a short break over here, but do stay tuned in. We have the management of JSW Steel playing out next, so do stay tuned in.
Hello and welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is from